Dig into more on the data, which was not like all doom and gloom.
No, I mean, look, Brian, sales did still fall in December, but not nearly as hard as the street was expecting. They dropped 1.5% month to month, but they were down 34% year over year. Rounding out the year, 2022 saw about 18% fewer sales than red-hot 2021. Now, higher mortgage rates and still tight supply are plaguing the market, with inventory at the end of December down about 13% from November. But here's a bright spot, actually up just over 10% from a year ago. At the current sales pace, that's still just a 2.9-month supply, and a 4 to 6 month supply is considered a balanced market, but we're getting there. Now, even with tight supply, prices are starting to ease. The median price of an existing home sold in December was $366,900, still up 2.3% year over year, but we're way off the huge annual gains we were seeing as recently as last summer. It is the smallest price gain since May of 2020. Now, homes are staying on the market longer, on average 26 days. That's up from 19 days the year before and just 14 days last July. All cash sales, though, are rising 28% in December, up from 23% the year before. And that's likely due to higher mortgage rates and a return of investors to the market as prices start to ease. And just one more thing, while sales are down at all price points, they are falling the hardest at the top of the market. Sales of $1 million plus homes were down 45% year over year, while the other price points were only down in the mid-30s range. So there's your luxury issues, Brian.
Seems to make sense. Diana, stick around. Let's talk more now about all of this and bring in another voice. Danielle Hale, Realtor.com's chief economist. And Diana, of course, still here. Danielle, so this is probably a bad question, but mortgage rates are about 6% on average now, but at least they're staying there. And is there a positive story to be told in that rates seem to have stopped rising? While 6 is more painful than 4, at least I imagine as a buyer, you know what you're going to get rather than having to deal every day with like another higher rate?
Yeah, the volatility that we've seen lately in mortgage rates has been on the downside. So that's in buyers' favor. So a much better direction for buyers. It's helping to make the pricing on homes much more affordable for buyers who are taking on a mortgage. But as Diana noted, the uptick in sales was in investors, and those are buyers who are often using cash and so aren't as affected by swings in mortgage rates. What's also interesting is that we saw an uptick in first-time home buyers. It was very slight, but they did see a slight increase in share in December. And so that suggests that, yes, some home buyers are taking advantage of slightly lower mortgage rates. And I think as we move into the new year, a lot of people set resolutions looking forward to make a move in the calendar year. And I think that's going to be a big boost to home sales for those folks. The fact that we're seeing lower mortgage rates is making homes more affordable for people relative to what they were at the end of the year last year.
Yeah, you buy that argument at all, Diana?
I mean, I don't know, because there's this incredible push and pull, and Danielle actually talked about it, and she put out a release this morning as a reaction to these numbers. This push and pull between buyers and sellers, which is that sellers are afraid to list because they don't want to catch a falling knife, and buyers are afraid to buy for the very same reason. They don't want prices to go down even further and miss out on perhaps a bargain. So, I mean, lower mortgage rates are certainly going to help, and we saw that in the home builder sentiment numbers this week. They saw more buyer traffic in there. But I want to know from Danielle, who jumps first, the buyers or the sellers, back into this market?
I think the buyers are already in the market. They're just waiting for their opportunity. I think in order to see sales pick up, you're going to have to see the sellers come in. Now, the good thing for sellers is that they are sitting on still record levels of home equity. Even though home price growth has slowed, it's still positive. So if I'm going to choose, I would much rather be a seller than a buyer in today's market. But there are plenty of buyers for whom it's the right time to make a home purchase, regardless of the economic conditions. They're really just waiting for that affordability to improve.
Diana, I think you and I talked about this the other day. And, if I'm on Realtor.com, I'm not trying to plug Realtor.com, but you're a guest, so I'll plug it. I want to look at the last time the home sold, because you can look at the property history, right? So if I go and I say, okay, I'm a buyer, I like these two homes. Wait a minute. This home was last sold in 1994. They've been living there a long time. They probably have it paid off or close to it. This house was sold in 2019. They might be underwater and won't be flexible on price. That equity's got to matter a lot on how much they're willing to move, Diana.
Right. I mean, it's all about the negotiation, but I do think that buyers now have a lot more negotiating power. They don't have to drop all the contingencies like we were seeing 2 years ago when you could buy a house, but you couldn't say, oh, I'd like to have a home inspection, please. Now those are back, and there is, less competition in the market, and that means that sellers do have to be more flexible. As for the equity issue, I think it really plays much more into the potential sellers, what they're saying about, do I want to give up this mortgage rate and have a higher mortgage rate where I'm paying more into it and then not gaining as much equity as before, or do I sit on this equity and perhaps take some of it out and redo the house in the way that I want it so they don't have to move? I think that plays into that side of the equation, but hands down, all across the board, we just need more supply.
That's it, and we'll have a more supply show, I'm sure, next week. Danielle Hale, Diana Olick, as always, thank you very much.